My name is Frank Gooch and I am the Chairman of Pengana International Equities Limited. On behalf of my fellow directors, I welcome you to the company's 2021 Annual General Meeting. Regrettably, we are again not able to meet in person due to the COVID-related restrictions. However, I am pleased that we can come together virtually to report on your company, conduct formal business, listen to any comments you may have, and answer your questions. It is now just after 9:30 a.m. There is a quorum present and I declare the meeting open. Joining us today online are your directors Russell Pillmer, who is our Managing Director, and our non-executive directors David Groves and Sandy Orleo. Sandy is also the Chair of the Audit, Risk and Compliance Committee. Also present today are Paula Ferro, our Company Secretary, Will Deer, the Pengana Capital Group's investment specialist, who will be available to answer portfolio-related questions later in the meeting, and Jadis Manga, a representative from our auditor Ernst & Young, who will be available to address any questions relating to the company's financial statements. The notice of annual general meeting has been made available to all shareholders, and holders of 39.9 million shares, or 16% of the company's ordinary shares, have voted. I will now open online voting for those of you who have not yet voted or who wish to change a proxy vote previously submitted. Details on how to access the online voting site are now up on the screen, and the voting portal will remain open during the course of this meeting. Results of today's meeting will be released to the market shortly after the end of the meeting. This year, shareholders will have the opportunity to ask questions verbally or by submitting written questions. You may submit your written questions now or at any time during the meeting by clicking the Q&A icon at the bottom of your screen, and we will address them at the appropriate time during the meeting. We will only be addressing questions from PIA shareholders, so please identify yourself when submitting a question verbally. I will repeat these instructions later in the meeting. If we are not able to answer one of your questions today, a member of Pengana's executive team will get back to you after the meeting. Today's meeting will be structured as follows. Firstly, I will report on the 21 financial results and key highlights for the year. Following my report, we will move straight to the formal business of the meeting and consider the first three items in the notice of meeting. You'll have the opportunity to ask questions and make comments on each item of business, and there will be a general question and answer session while the votes are being counted. Each of the resolutions to be considered at this meeting will be taken to a poll. The spill resolution contained in item 4 on today's agenda will only be put to the meeting if more than 25% of the votes cast on the resolution to adopt the remuneration report are cast against its adoption. Therefore, I will pause the formal business while we await the poll result for voting on the remuneration report. While the result of the poll is being determined, our Managing Director, Russell Pillmer, will discuss the appointment of Harding Loevner to the investment team and provide an overview of the investment strategy. We will then play a pre-recorded message from Raymond Vars from Harding Loevner. Ray will discuss the portfolio's performance since Harding Loevner's appointment and provide an update on the portfolio's current positioning. A question and answer session will follow the video presentation with shareholders invited to ask their questions. The formal business of the meeting will resume after the Q&A session, and if required, the spill resolution will be put to the meeting. If there is no further business after that, I will close the meeting. A link to a recording of today's meeting will be sent to shareholders should you wish to view the meeting again after its conclusion. I will now present my report on the company's performance for the year. In financial year 2021, PIA delivered a strong profit result, increased its annual fully franked dividend, improved its distribution and shareholder communications, and welcomed a new investment team. In May this year, Pengana Capital Group appointed New Jersey-based Harding Loevner to its investment team, and they are responsible for PIA's portfolio of international investments. There was a smooth and efficient transition of the portfolio in May, and the performance of the new portfolio in June improved PIA's relative performance for the year. In the 2021 financial year, the portfolio delivered investment returns net of fees and expenses of 27.6%. This compared quite favourably with the benchmark return of 27.5%, which is not affected by fees and expenses. The strong investment result drove a 149% increase in profit after tax for the financial year to $60 million. The profit included $59.6 million of realised gains, which were largely due to the portfolio transition undertaken upon Harding Loevner's appointment. The tax paid on these gains increased the franking credits available for distribution to shareholders. Delivering consistent, fully franked dividends is a key component of PIA's objective. It is pleasing to report that PIA exceeded its 21 dividend target by declaring fully franked dividends totaling 5.1 cents per share, and that the fully franked dividend target for 2022 financial year has been increased to 5.4 cents per share. In addition, the company announced in October 2020 that it would pay dividends each quarter. So during the year, PIA distributed $15.9 million in fully franked dividends to shareholders. These dividends comprised the 2020 final dividend of 2.5 cents per share and 3 quarterly 2021 interim dividends of 1.25 cents per share each. The final dividend declared for the 2021 financial year was 1.35 cents per share. The total of the fully franked dividends declared out of the 2021 financial year was 5.1 cents per share. This exceeded our original target of 5 cents per share. In August this year, the board reset the annual target for future fully franked dividends to 5.4 cents per share to be paid in quarterly instalments of 1.35 cents per share. This represents a 5.9% increase over the 2021 annual dividend. On Tuesday this week, the board declared the interim dividend for the first quarter of the current financial year. A fully franked dividend of 1.35 cents per share will be paid on the 15th of December to shareholders on the register as at the 1st of December 21. PIA's current financial position, together with Harding Loevner's long-term track record of consistent superior returns, provide a strong and reassuring base from which the company's directors believe a continued stream of quarterly fully franked dividends can be paid to shareholders. PIA's share price at the end of the financial year was $1.32, which was up from $1.07 at 30th of June 2020. The total shareholder return, which includes dividends paid in the year, was 29.2%. This return to shareholders does not take into account the additional value of the franking credits attached to those dividends. The company's share price reflects not only the performance of its portfolio, which drives growth in net assets and sustains the company's dividend policy, but it also reflects the efforts of promoting the benefits of an investment in PIA to existing potential investors. In September this year, the company undertook an extensive and well-received shareholder engagement campaign. Email is the primary and most effective means of communication, but in an effort to reach all shareholders, a calling campaign was undertaken targeting 400 self-advised shareholders who held over 15 million shares. Our strategy of promoting the benefits of an investment in PIA to the advisor market was gaining traction during the year, with demand for PIA shares growing. However, this was interrupted when the ratings agencies suspended their rating of PIA, pending the completion of a review of the appointment of Harding Loevner to the investment team. Since the end of the financial year, 3 ratings agencies have completed their review of PIA and issued recommended ratings, a crucial factor when promoting the company in the advised market. Since then, there has been a sustained improvement in the company's share price when compared to the value of its net tangible assets. Looking forward, the company is in a good position with assets totaling $380 million and no debt. It has franking credits and profit reserves to support the ongoing payment of fully franked dividends, a well-resourced, successful investment team, and a committed distribution team that will continue to promote the benefits of investment in the company. I'd like to conclude by thanking my fellow board members for their contribution during the year. I would also like to thank the staff of Pengana Capital Group for their support and efforts in managing the investments and reporting to shareholders. And finally, on behalf of the board, I would like to thank our 6,500 shareholders for their continued support. So we will now commence the formal business section of the meeting. There are 4 items for consideration by shareholders, with the 4th item contingent upon the results of the voting on the remuneration report. As part of the government's response to COVID-19, modifications were made to the Corporations Act of 2001, which allows a notice of meeting to be provided online. I can confirm that information on how to access the notice of meeting was dispatched to all shareholders in accordance with this Corporations Act modification and the company's constitution. Unless there is any objection, I will take the notice of meeting as having been read. As chairman of this meeting, I'm going to take each resolution to be considered in this meeting to a poll in accordance with the Corporations Act. Voting instructions are now on the screen. I will endeavour to give all members who wish to speak a reasonable opportunity to do so. I ask that you please keep your questions and comments related to the matter at hand and as succinct as possible. If you wish to ask a question, please click the raise hand icon at the bottom of the screen and wait until you are invited to ask your question. Please identify yourself before asking the question. Alternatively, you may also send your question by clicking the Q&A icon at the bottom of your screen, and it will be read out by Paula. We will announce the results of voting on the resolutions to the ASX following the end of the meeting. I appoint Mr. Richard Powell of Computershare as returning officer for the poll. In accordance with the Corporations Act, each member will have 1 vote for each ordinary PIA share held by them. Computershare have the details of your registered holding. I have been advised by Computershare, our registry, that all proxies received have been checked, and I declare them valid for voting at this meeting. I will disclose the proxy votes on the screen prior to the vote being taken for each resolution. These figures will be as at the closing time for receipt of proxies, which was 9:30 a.m. on Tuesday, the 19th of October, 2021. I remind the meeting that subject to the voting exclusions details included in the notice of meeting, the chairman will be voting any undirected proxy votes in favour of all resolutions, with the exception of item 4, where the chairman intends to vote against the proposed resolution. We will now move to item 1 in the notice of meeting, being the consideration of the company's financial report for the year ended 30th of June 2021. The financial report has been made available to shareholders on the company's website and in hard copy for those who have specifically requested a paper version. You will not be asked to vote on the financial report, but you have the opportunity to ask questions of the directors and management about the financial report. You are also invited to ask questions of Mr. Jadis Manga of Ernst & Young, the company's auditor. Are there any questions or comments on the financial report? If there are any questions specifically on the investment strategy, the portfolio or its performance and positioning, please wait until the investment manager's update later in the meeting. So happy to take any questions. Paula, there's no written submitted questions?
No, there's not.
Okay, if there are no questions, we will move on to the proposed resolutions as set out in the notice of meeting. As item 2 relates to my re-election as a director, I will hand the chair to Ms. Sandy Orleo while this item is considered. Over to you, Sandy.
Thank you, Frank, and good morning to you all. Item 2 on the notice of meeting is a proposed resolution to re-elect Mr. Francis Gooch as a director of the company. I move that Mr. Francis Gooch, who retires by rotation in accordance with Article 11.2 of the Constitution and Listing Rule 14, being eligible, is re-elected as a director of the company. Proxies have been received on this resolution as set out in the slide on screen. Are there any questions or discussion on the resolution? There doesn't appear to be any questions coming through or any hands up. I now put the resolution to a vote. Please now mark either the for, against, or abstain box on your own online voting screen. Back to you, Frank.
Thank you, Sandy. Item 3 on the notice of meeting is a proposed resolution to approve the remuneration report. That report is set out in full in the annual report. The company has no employees or remuneration expenses other than fees payable to the non-executive directors, as all operational and administrative duties are performed by the investment manager. As your representatives, the PIA board is comprised of 4 directors with an average of 25 years experience in the finance and investment industry. Details of the experience of each of your directors can be found in the directors report section of the 2021 annual report of the company. The company does not remunerate directors through equity. However, all directors have shareholdings in PIA, as we have confidence in the company and strongly believe that this aligns our interest with shareholders. In addition, Russell also has a significant share ownership in Pengana Capital Group and therefore has a significant alignment of interest with the long-term performance of PIA. Russell, who is also Director and Chief Executive Officer of Pengana Capital Group, PIA's investment manager, is not remunerated at all by PIA. The directors' fees for non-executive directors have remained constant since the 2018 financial year, when they were reduced by 23%. I move that the remuneration report of the company, as set out in the company's annual report as part of the directors' report for the financial year ended 30th of June 2021, be adopted. We will disregard any votes cast on this resolution by those persons set out in the remuneration report voting exclusion statement section of the agenda to the notice of meeting convening this meeting. Proxies have been received on this resolution as set out in the slide on screen. Are there any questions or discussion on this resolution? Okay, Paula, no hands raised, nothing submitted. All right, thank you, everyone. I now put the resolution to a vote. Please now mark either the for, against, or abstain box on your online voting screen. I will now adjourn the formal business portion of this meeting while Computershare reps tally the results of the poll conducted so far. And while we await the poll results, I'll now invite Russell to present to the meeting. Over to you, Russ.
Thank you, Frank, and good morning, everyone. Great to see so many shareholders on the call today. The appointment of Harding Loevner as our new investment team in May was a significant development for the company. Following the departure of the internal team, Pengana conducted an extensive search, aided by a globally renowned consulting firm, to find an appropriate replacement manager. The key requirements in searching for the manager were a high quality and respected organization, the proven investment process, a long-term track record, experienced personnel, and strong awareness and integration of ESG issues. Harding Loevner was selected from a shortlist of managers following a thorough investment and operational due diligence process. The appointment of Harding Loevner provides PIA shareholders the stability of an investment team with a 31-year track record, managing over US $84 billion of investments on behalf of some of the world's leading and largest and most sophisticated investors. Harding Loevner seeks to invest in high-quality growing businesses at reasonable prices over the long term. This quality growth investment philosophy has been the foundation of Harding Loevner's strategy since the firm was founded. Harding Loevner's responsible investment process, in combination with the continued application of Pengana Capital Group's ethical screens, strengthens PIA's position as the largest international ethical LIC on the ASX. In the following pre-recorded video message from the investment team at Harding Loevner, Ray will provide a summary of the performance since the appointment and discuss the portfolio's current positioning and outlook.
Hi, I'm Ray Vars, a partner and senior portfolio specialist at Harding Loevner Asset Management, and I appreciate the opportunity to speak to you today at the annual general meeting. As we were recently appointed as a manager, I wanted to provide a quick reminder of our approach before diving into recent performance, our current thinking, and positioning of the portfolio. So we invest in high quality, growing businesses, regardless of where they are domiciled, identified through deep, fundamental, bottom-up analysis. We pay attention to the price we pay for those companies, and we manage a diversified portfolio. And by building that diversified portfolio of high quality, growing businesses, we've achieved very consistent outperformance in the long run. And have done so since we started more recently managing PIA. We began managing in May, so the first full month of management was June. And looking at performance for the trailing 4 months, June through the end of September, the fund was up 9.5% in Australian dollars versus the MSCI World up 8.8%. While most sectors and regions rose in Australian dollars for the last 4 months, China was a notable exception, dropping 12% and dragging down emerging markets to be the only negative region around the world. Looking on a sector basis, COVID winners in the technology and healthcare space were once again leaders in the performance. In the last 4 months, though, they were joined by energy stocks, which rose with rising oil prices and hopes for continued economic recovery looking ahead. So how have we outperformed in this period? Much like our long-term track record, it's been driven by strong stock selection, both in a sector basis or a region basis. Looking first by region, China, like it was for the general market, was the biggest relative negative for the period for our portfolio, where we had a number of holdings down more than 20%. But more than offsetting that was very strong stock picking in developed markets in Europe and Japan, but particularly in the US. Technology stocks like NVIDIA, the chip business, or EPAM, which is an IT consulting services business based in the US, headquartered at least, but with software engineers around the world, particularly in Eastern Europe, performed very well. They were joined by healthcare companies like Edward Life Sciences in the US, but also healthcare companies in Switzerland like Alcon, or in Japan, Sysmex, a testing business. They were all strong performers, and those also helped drive strong stock picking on a sector basis, particularly within tech and healthcare. Chinese companies weighed on a sector basis as well, and communications, where those businesses that were hit by some of the regulatory reform that I mentioned before fell. But before I dive further into some of those Chinese names, I sort of wanted to take a step back and talk about some of the other issues on our mind as we sort of survey the global investment landscape. And I'm sure some of these things are on your mind too. There's a lot of talk about COVID, obviously, and inflation. And I think that a lot of what we see is, could almost be characterized as maybe COVID indigestion, and there's a lot of different symptoms that come with that. Some of it is disruptions we've seen in global supply chains, rising labor and energy costs, and clearly that's leading to some concerns of inflation. And the key is Is that temporal? Is that going to be something that fades as those sort of disruptions work their way through the system? Or is this a new normal where we're going to see higher inflation, higher rates for a longer period of time going forward? Clearly, if we do see that, that could be a headwind to the portfolio. High quality growing companies tend to trade at pretty rich valuations, and those could compress if we see higher interest rates persist for a long period of time. Of course, offsetting that is the fact that we think we're invested in a lot of great businesses where we see a lot of strength and continued strength and innovation across many different sectors of the global economy. And so those shorter term headwinds, those macro headwinds, which may create dislocations, we see those as opportunities when taking a long-term perspective. And that's how the portfolio is really compounded value in the long run, both by owning high-quality businesses that compound that growth, but also staying focused on that long-term horizon. So when we see dislocations, often macro-related, we're not afraid to step in and invest in a company where the stock price we think has been unfairly hit in the short term. And so again, we see those secular trends continuing of digital transformation. It's not slowing down. We've talked before and written about in our letter, if you look at that, the golden age of sort of healthcare innovation. And I can touch on some of that and how we're positioned in the portfolio later. So we really like the fundamentals of many of those secular winners. With that, maybe I should step back and dive a little deeper into China, given it's about 10% of the portfolio and was the source of some of the underperformance in the short run. Of course, as the market I mentioned has fallen about 12% in Australian dollar terms, we've actually, some of our names have held up a bit better in the high quality growing areas of China. Of course, we had some that were hard hit, like Country Garden Services, which is a real estate business, but I should distinguish it very much from Evergrande and the property developers that are facing a liquidity crunch and have been missing interest payments, and we think is a real challenge for those businesses going forward. Country Garden Services was not immune, I think, just because it happens to be in the sector, but they focus on providing services, and it's not only an area that we think the government wants better quality for many of the middle class that they care about. It's part of the common prosperity goals of the government. So we think CGS is actually well positioned there, Country Garden Services, not only because some of what their business is aligns with the government's goals, but also it's a highly fragmented sector that it's taking consistent market share both through acquisition and organically. So we think this is a sort of an example of a short-term hard-hit business that's being caught up with sort of macro concerns that we see a long-term opportunity when you really dig down deep into the company and what the real drivers are. Another area, innovation, what I talked about before, particularly in healthcare. One of the recent purchases in the portfolio, Wuxi AppTech, certainly sort of hits on this in particular. They're a contract manufacturer, so healthcare companies around the world, pharmaceutical businesses around the world, as well as within China, would outsource development and manufacture of small molecule drugs to Wuxi AppTech. So those are pills, for example. And Wuxi AppTech's actually a sister company of Wuxi Biologic that we own, which is also a contract manufacturer, but for biological drugs. And that's where a lot more of the emphasis and growth and excitement has been, while small molecules have sort of been forgotten. What we see with Wuxi AppTech is actually they have great IP on that front, and more companies are continuing to outsource for them. So there is still rapid growth on the small molecule side, but Wuxi AppTech has also sort of leapfrogged from that over biologics and gone for the next big thing of gene and cell therapy. And I guess Peter Bond, one of the portfolio managers, likes to make an analogy. If you think about small molecule drugs or the pills, the relative complexity compared to biologics and gene therapy, a pill would be like a bicycle. in terms of complexity, whereas biological drugs are like moving to building a car, whereas gene and cell therapy is the complexity of manufacturing an airplane. And when you think about that, there's a lot of innovation there to come. WuXi AppTec is well positioned. So they're taking the cash flow and earnings they've been generating in the small molecule side and reinvesting in that gene and cell therapy, where they're really a clear leader, looking not just in China, but across the world. And that's pretty exciting. When we look at China, not all of the companies are well positioned going forward. And so we have to acknowledge some we let go recently. For example, Alibaba, very strong business. Obviously, regulatory concerns are something people point to with Alibaba, and certainly they've been a target of the government along with a lot of e-commerce businesses. But that's not really why we let it go. Our concern was actually rivalry. So companies like Meituan, Pinduoduo, some of the smaller competitors have been more agile and have been investing in areas that are causing Alibaba to have to invest as well. And we think that may pressure margins and potentially longer term growth for a company like Alibaba. So enough on China. Looking beyond that, we're excited about a lot of names. Again, in technology and innovation, a company like Applied Materials, AMAT, that we added to the portfolio, US-based tech company that we think is a real complement to ASML that we own in the semiconductor space, as well as NVIDIA and Synopsys, another business. AMAT actually helps with sort of that next generation of chip manufacturer, where ASML has been helping TSMC, Intel's of the world, sort of shrink the chips with their production equipment. AMAT is helping sort of stack those chips and turn those into three-dimensional chips. And sort of that's what you need to do to pack more computing power on a chip. So they're well positioned for that long-term growth. And it's almost like we have a suite of semiconductor businesses that are all well positioned. When you lump AMAT with ASML, with, as I mentioned, NVIDIA holding, but also Synopsys that I mentioned, which does software for design of chips. So you sort of have the design, the equipment to manufacture, and then the chip company itself and NVIDIA. And we think that those are very well positioned as semiconductors and their use is only going to continue to accelerate from our perspective. So stepping back to look at the portfolio as a whole, we haven't made any big changes to the structure of the portfolio, and I wouldn't expect that going forward. We go stock by stock in making our decisions. The portfolio continues to be very overweight healthcare. We're excited about that innovation that I talked about, particularly with WuXi, AppTec and Biologic, but many other companies like Edward Life Sciences, Sysmex. So there's a lot of great businesses around the world, and we're very overweight there. IT, we're overweight, but can't really put much more to work there. We have a 25% maximum by sector. So we're sort of nearing that in tech. The two areas where we're overweight on a regional basis are the US and emerging markets, really driven by our exposure in China. Again, there's a lot of great innovation, and those are the types of companies we want to own regardless of country, regardless of sector. But we are mindful of price. So if you look at sort of what the biggest stock was a few months ago in the portfolio, and actually over the last couple of years at Harding Loevner, is PayPal. It's still a top 10 holding, but it's just 2% of the portfolio today. We've trimmed that because of valuations. And you see other companies, actually two of the top 3 holdings in the portfolio happen to be US-based financial services businesses, First Republic Bank and Silicon Valley Bank, two of the only, from our perspective, really growing financial services businesses around the world, high quality, generating high returns. But I think that highlights that we're able to find quality growing businesses across many sectors, not just in tech and healthcare. So, in the end, the portfolio may be exposed to some macro headwinds, but we really like our holdings. And as I mentioned, we're going to take advantage of dislocations to add to some of those long-term winners. So thank you again for the opportunity to speak to you today. And we greatly appreciate the trust you've placed in us to manage your assets. So thank you.
Okay. Thanks, Russell, for your report, and thanks to Ray Thought the video was quite detailed and informative, particularly with their thinking about the market as it is today. Although Harding Loevner are based in New Jersey, they are committed to assisting us with our shareholder engagement. And to this end, next Tuesday on the 26th of October, the Harding Loevner team will be conducting a full-length webinar and Q&A session in which attendees will be able to ask questions of the investment team. So if you're interested in joining that webinar, please note the registration details that are now on the screen. I think it'll be a great opportunity to actually interact with the investment team themselves. Now, today we have Will Deer, Pengana's International Equities Investment Specialist. He's present with us today, and he's available to answer any questions you may have on the investment strategy or the portfolio or its performance and positioning. So are there any questions for Will or Russell in relation to the portfolio? Okay, nothing, Paula? No. Okay, well, thanks for listening to those presentations.
Sorry, there is a shareholder that has raised his hand, Mr. Andrew Cumming. Why did you exit Clients? Will, I'm not sure if you can answer that one.
Good morning. I hope you can hear me. The position in Keyence was exited due to valuation. The valuation was appearing somewhat stretched, given despite the strong business. So that's why Keyence was exited.
Thanks, Will. We've got one other question from Ms. Carolyn Rance. Did the investment manager have any previous experience in managing ethically screened portfolios?
Will?
Thank you, Caroline, for the question. Good morning. The investment manager, Harding Loevner, has a 32-year track record, predominantly of sustainable investing. So it's fair to say they do have experience managing assets in a sustainable way. The in-depth research that they carry out at Harding Loevner has this fundamental analysis and consideration of ESG risks at every step of their process. And this is a process that's been consistent for the last 32 years.
Thanks, Will. There doesn't seem to be any more questions coming through.
Okay, we'll move on. Of course, if anybody has any questions, please feel free to contact the company at any time. The results of the poll are in, and as less than 25% of the votes were cast against the resolution to adopt the 2021 annual report, item 4 on the notice of meeting is not required to be put to the meeting. So thank you, ladies and gentlemen. But before I close the meeting, are there any other questions, general questions or portfolio questions? Okay. As there is no further business to be conducted, I declare the poll and the meeting closed. I thank you for attending today and wish you well. Thank you.